Futures contracts in Shanghai that allow domestic and foreign investors to invest are gaining more popularity despite COVID-19 outbreak. One of the popular contracts, the TSR20 rubber, is seeing a surge in transaction volumes in recent months, which means wider recognition by the international market. CGTN reporter Cheng Tong talked to some investors to find out more.
Following the price changes of the rubber futures has been one of the daily routines for Wang Xuefeng. Wang is in charge of the China office of a Singaporean rubber maker. Since 2020, Wang's company has been using the TSR20 rubber futures in Shanghai as the pricing benchmark while negotiating with buyers. TSR20 is a type of natural rubber and is mainly imported from Southeast Asia. Its financial product, the futures contracts, were launched in Shanghai in 2019 and are renminbi denominated. Investors can also enjoy net price. Before the launch of the TSR20 contract, Wang used the Shanghai Natural Rubber Futures, which launched in 1993 as the pricing benchmark for domestic trading. And for cross-border trading, Wang's company had been following the rubber futures listed in Singapore. But now, the Shanghai price has since become a priority choice for local dealers.
If local companies use the futures contracts in Singapore, which are US dollar denominated, they will be affected by the currency exchange rates, which will give them some operational difficulties. The Shanghai contracts are more close to the actual prices here, and while we're negotiating with tire makers, we find more and more of them are using the Shanghai price.
This is the so-called TSR20 rubber, which is the raw materials for the production of tires. China has become the largest consumer and importer of such rubber, so the launch of futures contracts has attracted many investors over the past years.
Before the launch of futures contracts, the trade of such rubber was only between suppliers and buyers. But now, financial institutions and investors can also participate in trading, and that has given abundant liquidity into the market. Wang Haibing, who provides a one-stop service for traders from rubber storage to customs clearance, says market participants have diversified.
The TSR20 rubber was a spot import product, but it's changed since it was listed on the futures market. We've seen more domestic and foreign participants, trading companies and financial institutions also come to invest, so the market structure has changed.
In the first half of the year, the transaction value made on Shanghai's TSR20 rubber was worth some 650 billion yuan. That's more than 96 billion US dollars, up 46% year on year. Shanghai is also providing more products to meet the demand of buyers.
Since the launch of the product, we have provided registered deliverables from 37 factories of 25 companies. They are from 4 countries like Thailand, Malaysia, and Indonesia. These products are widely recognized by domestic and foreign downstream firms.
With the active participation of domestic and foreign entities, the trading volume of Shanghai's TSR20 rubber hit a historic high this month. On July 13th, some 120,000 deals were made on a single day alone. Cheng Tong, CGTN, Shanghai.